Money FM 89.3, the best of the afternoon update.
Now, a few years ago, if you mentioned DeFi at a dinner party, chances are you'd get blank stares or maybe someone asking if it had something to do with Dogecoin. But these days, the conversation is changing. Behind the scenes, major financial institutions are taking a serious look at decentralized finance. Not because it's trendy, but because it's starting to offer real-world solutions, faster settlement, more transparency, and entirely new ways of moving money. So, what does this new face of DeFi look like? And why are the big players finally paying attention? I'm Lynlee Foo. This is Industry Insight. Joining me today is Xin Song, CEO of GSR, a global leader in digital asset markets. He is here to break down the rise of institutional DeFi and what it means for the future of finance. Xin, great to have you with us.
Hi, Lynlee. Pleasure to be here. Thank you for having me.
Now, as always, let's start with the big picture. A couple of years ago, DeFi exploded in popularity, but most institutions didn't jump in. They watched from the sidelines. Fast forward to today, that's starting to change. Why is DeFi back on the institutional radar?
Yeah, it's a great question. I think broadly speaking, we define institutional DeFi as the use of decentralized financial technology by traditional financial institutions. So you're absolutely right. In the DeFi summer of a few years ago, the first wave of adoption was definitely from retail, primarily in trading and the borrower lending markets. The last couple of years, we've seen a real increase in engagement on the part of the institutions. For example, my old firm, BlackRock, that I worked for in London for 6 years, was one of the leaders here in terms of tokenizing their money market funds with the BIDL product. Mm-hmm. And we've seen many others, including Fidelity, Franklin Templeton, etc., adopting these. I think the real drivers of it are twofold. Number one, it's development in infrastructure. So in the last 2 years, infrastructure has greatly matured, right? We're seeing much better robustness, much better security, which we can touch on later, and that's growing confidence. Mm-hmm. The second thing is regulatory changes. So especially since the new US administration, we're seeing lower enforcement risk against the DeFi venues, for example, Uniswap. And just as of last night, the SEC realized that they released new innovation exemptions for DeFi. So we're definitely seeing moves in the right direction. Overall, in the long term, I would say institutional DeFi is a little bit of an oxymoron. We think of DeFi as decentralized finance, meaning this intermediation of the industry and ultimately a peer-to-peer network. Institutional adoption isn't necessarily the end goal here, but it's definitely necessary in the transition, right? Just like we've seen in the media industry. Mm-hmm. For example, Twitter has disrupted journalism, but we still see newspapers and radio stations exist and thrive. If not, otherwise we wouldn't be having this conversation. So we'll definitely see a smooth transition over multiple years, I would say.
Okay, so it's maturity of protocols, better risk frameworks, and hopefully more serious use cases as well?
100%. Yeah.
Okay, so it's no longer just about experimental yield farms or retail trading. There's now a path for larger players at least?
Yes, definitely to adoption for larger players. I think liquidity has been one big barrier, and then smart contract risk has been another barrier. So liquidity is something, we're trying to be part of the solution for. As we know, in mature capital markets, institutions represent the lion's share of liquidity, right? So 80% plus, as we know on the SGX or US equities. And really for smooth functioning of markets and price discovery, you need institutional grade liquidity. And players like ourselves, as market makers, have to allow these very nascent frontier markets to develop. So that's one thing that's allowed larger players to come in. And then the other thing is improvements in smart contract risk. Right? They're still real. We've seen exploits in the last few months even. Not a DeFi exploit, but on a centralized exchange like Bybit, that happened. However, I think the industry is making real progress in this area by having the ability to simulate transactions and also have an isolated environment for participants to intervene before full transaction finalization and settlement happens in case it goes wrong. So players like Verge are doing this and creating a new institutional grade chain for tokenized assets, for example, to do that in a safe environment before there is finality and no going back.
Okay. There's certainly a lot of interest in this space now, but interest, of course, doesn't always translate to action. So what do you think are the biggest hurdles stopping institutions from diving deeper into DeFi?
I think regulatory posture has been one big one. We touched on that already. Mm-hmm. And then the second one is probably KYC and anti-money laundering or counter-terrorism financing restrictions, right? So these are the big concerns from the financial institution adopting that we see in the market. On the first one, we touched on the US already, but closer to home, I think Singapore has been a big pioneer in this space. Mm-hmm. For example, MAS launched Product Guardian. Recently, we've seen some of the big institutions like DBS, SBI, JP Morgan do the first pilot program where we're conducting foreign exchange of tokenized Japanese yen and Singapore dollar or tokenized government bond transactions. So that's very welcome. And even then in Europe, for example, a holistic framework in terms of MiCA, the Markets and Crypto Assets Regulation, is coming into force. So it's not just a regional trend, but I would say it's a global welcoming of this paradigm shift. And then on the KYC AML side, this is a big issue, right? I think it's worth saying that blockchains by design can allow this and offer a good solution. So they're auditable, they're transparent, as you said in your introduction. And so it's much easier to track and follow illicit activity. However, one big blocker has been the lack of digital identity tokens that are backed by government entities. So without that, it's very hard to do full on-chain KYC. But again, Singapore is innovating here. Yesterday, we attended events where parts of ThinkPass data were being put on-chain with Solana technology as the layer one. So, yeah, that's really interesting, right? And we're continuing to lobby for adoption of good practices here, blocking most in countries, having transaction monitoring of the source of funds, etc. And I think that will really usher in a new era of adoption.
Yeah, indeed. I suppose if you're managing billions, the risk tolerance is very different at that level. So where does GSR come in? Are you helping these players get comfortable or helping shape the protocols themselves?
We are a little bit of both. So, GSR is a fund that's been in the crypto industry for 13 years, but all of us come from a traditional finance background. I mentioned earlier, I've been a BlackRock fund manager. Our founders, ex-Goldman Sachs alumni.
Wow.
So we've been used to operating in regulated markets, right? And we know what it takes to create institutional-grade liquidity and confidence in these markets. So we're trying to help bridge the traditional and decentralized finance worlds. How we do that specifically is in a few areas, right? So one is in terms of investing in new protocols and backing the entrepreneurs from the early stage of development. And then secondly, providing liquidity, as I mentioned, a good trading experience, whether it's for retail or institutions on these platforms. And then finally, over-the-counter services to help people get back into the fiat world, right? And we're a regulated payments service institution in Singapore that allows us to help clients get back into fiat currencies and pay their staff and pay their liabilities in Singapore dollars and other currencies. So we're sitting across the spectrum and trying to help bridge the gap that we see in terms of understanding, but also traction for the entrepreneurs.
That's helpful to know. You're not just trading, you're helping build the ecosystem from the ground up.
Yeah, you could see it that way. The joke is that GSR, whilst it stands for the initials of our founders, the joke is that it really stands for Goldman Sachs Reinvented, meaning everything that a merchant bank might do in the securities world, we are doing in the digital assets world, right? So following the life cycle of a token from early stages, private markets to public markets to maturity and widespread institutional adoption. So we're helping every step of the way as a crypto capital markets.
Wow. Very interesting. Xin, now let's talk about tokenized real-world assets. Everyone seems to be talking about them. Bonds, treasuries, real estate going on-chain. Why is this such a hot area right now?
Yeah, it's a great question. I think, again, the real trend is that the securities world and the digital assets world are converging in the previous administration in the United States, the regulators, including the SEC, tried to prove that all tokens are securities. In the new administration, that turned on its head. And what we're seeing now is everybody trying to tokenize all securities. Why are they doing that? Well, it's for a few reasons, I guess. You touched on a few in your intro as well, right? It improves settlement speed. So instead of FX or fund transfers making T+2, T+3, as we're used to in the traditional world, this can happen instantaneously or within seconds in an on-chain world. Secondly, liquidity, right? Operating 24/7 instead of just market hours. Although that makes it difficult for operators like us to staff that around the world and cover, it improves the experience for the end user. They can access these markets anytime from any location. And then the third one is transaction costs. Ultimately, faster, cheaper, better for the end user, right? Again, going back to the correspondent banking network example, you might pay $25 to send money overseas, but on a blockchain that can be a few cents. So it's improving all those structures. In terms of tokenized real-world assets in particular, we are seeing the first use case be money market funds, because that solves two problems for participants. One is counterparty credit risk of exchanges in digital assets, because instead of having it custodied by the exchange, we can have them custodied by traditional financial institutions that are audited, regulated, the custody banks. And we're happier facing those companies. Secondly, it allows yields to be generated, the collateral that can be used on those venues for trading, therefore improves capital efficiency. So that's been the real, I guess, killer app for the first iteration of tokenized real-world assets. That's why we're seeing Franklin Templeton with Benji, BlackRock with Biddle, amongst many others, really have adoption. But the next wave might be tokenized private equity and improving the accessibility to a wider group of people. So instead of just being available to high net worth individuals at private banks, it can be available to a wider group of people, as long as we can control the risk and the appropriateness of access. Then I think it is in general democratization of financial services for more people, which should be a good thing.
Okay, so it sounds like the building blocks are there, but we're still in early stages in terms of scale and standardization. Xin, let's move on to tackle regulation, because it's impossible to ignore different countries are taking very different approaches to DeFi. So from your vantage point, what's the current regulatory posture when it comes to institutional DeFi?
Yeah, we touched on this a little bit earlier. I mentioned in the US, we saw a huge amount of enforcement risk in the last administration, right? So many of the players across the whole value chain, including exchanges, including liquidity providers like ourselves, including custodians, amongst other actors, were issued Wells notices. And what's happened in the last few months since the new administration came in is largely a reversal of that, right? So the enforcement risk has fallen away. I wouldn't say there is a clear welcoming of it yet. It hasn't moved to endorsement, but it's moved towards facilitation and away from enforcement at the most extreme negative end of the range. And so that breeds confidence. And I also mentioned other areas, other markets that have followed suit. Ultimately, this is a global arms race to see who can be a leader in these markets. So outside of what I've already mentioned earlier in terms of Singapore and Europe, we also see within APAC, Hong Kong, right? Take a very welcoming stance with the MFC.
Right.
And also Japan and Korea softening their prior pretty restrictive stances against stablecoins, against tokenization, for example.
So would you say in general, regulators and the DeFi industry are finally learning to work together?
Yes, I think as with any disruption, any disruptive foundational technology, which blockchain clearly is, there is fear of the unknown, but there is also protection of the incumbents who have political weight and power, right? So this is understandable. It's happened many times in the course of human history, whether that's the emergence of the internet or disruption of the media industry or disruption of the taxi industry with Uber and Grab and apps like that, for example, right? There's always going to be regulatory turmoil and uncertainty. But I think it's very difficult to stand in the way of change for more efficiency and lower costs for the end user, right? So I think, as you say, the regulators and the innovators are starting to understand how to allow the safe and orderly development of this market and keep the bad actors out.
Okay, Xin, let's talk about the tech stack. What still needs to be built before we can really talk about institutional scale DeFi?
Yeah, it's a great question. I said earlier that a huge amount of progress has been made already. I would say in terms of infrastructure, there's a lot already in place. It's somewhat analogous to the automated driving space where infrastructure like LiDAR or AI computation is already quite mature. It's really regulatory and political barriers to adoption that are holding things back, right? Because with these things, it's not just consumer apps that are like gaming or e-commerce where the risk is lower. With driving, the accidents lead to loss of life. With decentralized finance, there's real risk of fraud and loss of material wealth. So it's understandable. So there's caution in terms of adoption here. But I would say a lot of the building blocks are already there, and we're just waiting for more people seeing eye to eye from the policymakers and the institutions coming together.
Okay, Xin, we're running out of time, but I want to quickly touch on this. GSR's perspective, what parts of the DeFi ecosystem are most exciting to you right now?
I think it is going to be enabled that is currently impossible to achieve with the current infrastructure, right? So one specific example would be Franklin Templeton. I mentioned they have Benji tokens, which are tokenized money market funds. What they're being able to enable with a blockchain implementation is intraday yield. So historically, you would have had to hold the position until the end of the day to enjoy the yield for that day. But now it allows second by second intraday real-time calculations of yield, so that if you were to move your funds out of that product within the day, you're able to make your capital work harder for you and still yield without giving up that opportunity cost. That's the programmability allowed by blockchains and the online sort of tracking and ledger, allowing that granularity that otherwise wouldn't have been possible. So it's those types of new use cases that are genuinely innovative that we're very excited about.
So much to talk about, so little time, Xin. But from liquidity to compliance and from protocols to real-world assets, it's clear that institutional DeFi is no longer just a fringe experiment. It's becoming a serious part of the conversation about the future of finance. Xin Song, CEO of GSR, thank you for joining us on Industry Insight.
Thank you, Lynlee. It's been a pleasure.
To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.